Crypto Kids, we've got some breaking news. Michael Saylor has not only sold Bitcoin, he has conducted the largest sale of BTC in strategy history. In today's video, I want to show you the nitty gritty of why this happened. Obviously, 7 days ago, they published something called as the Bitcoin monetization program. We commentated on it and said, hey, this is a fancy name. It sounds like a good thing, but in reality, it enables strategy to sell 1.25 billion, up to 1.25 billion, and purchase dollars with Bitcoin. Isn't it supposed to be the other way around? Shouldn't they be selling dollars to buy more Bitcoin? Well, Bitcoin monetization program, everybody. Additionally, aside from that 1.25 billion, they can sell Bitcoin to fund preferred stock dividends and interest expenses as they become payable, or buy common A stock, which is MSTR. Today's sale of $225 million is not in that 1.25 billion bucket. It's actually in bucket number B to fund payments for STRF, STRE, Stark, Stirred, and Stretch. What does this mean? Does this change Saylor's strategy for good? What was some of the things that Saylor has said about the Bitcoin selling topic? Well, we'll get into all of that on today's update video. Make sure, though, to follow me on Twitter because we broke the news of Saylor selling Bitcoin faster than Saylor announced that he's selling Bitcoin. It's like a tongue twister. It's like she sells seashells on the seashore. Make sure to follow me on Twitter. Link is down in the description below. And of course, if you like these breaking news updates, do subscribe and turn on the notification bell and destroy that like button. We've went through all the tweets that Saylor has said of him suggesting go and sell your kidney if you must, but keep the Bitcoin, or sell a tooth if you must. I'm trying to find it here in this video. Sell a tooth if you must, but don't sell the Bitcoin. There's like hundreds of tweets that you can find. Okay, maybe not hundreds, but dozens of tweets that you can find from Saylor. The teeth one is, I believe, the funniest one. Look, if you go Saylor and search tooth, sell a tooth if you must, but keep the Bitcoin. He said these things over and over again, but now it's pivoted to buy more Bitcoin than you sell. Buy more Bitcoin than you sell. It's pivoted. Buy Bitcoin, don't sell Bitcoin, Feb 3, to buy more Bitcoin than you sell in just 6 months' time, less than 6 months' time. 225 million. It ranks as the number one sale, so the June 29th to the June 30th, as states on the 8K filing. They sold between June 29th to June 30, and they sold between July 1st to July 5th. The average price comes to about $60,000 in total, and the sale is roughly $225 million. What else is on the leaderboard? You've got the 3rd of December 2022, which was a sale of 704 BTC at $16,000, and then the 32 Bitcoin, which was sold in May. That was recent. I think it's quite critical to know, though, why each of these sales happened. They were for all different reasons. Today's sale, or the first week of July's to the end of June sale, 225 million, was to fund interest dividends or dividends for the preferred equities like Stretch, like Stark, like Stirred, so on and so forth. In the announcement that was released by Strategy last week, we covered it on the Crypto Kid channel. Under the Bitcoin monetization program, it's so geniusly put because it sounds like a great thing, but in reality, they're selling Bitcoin to buy US dollars and fund dividend payments or buying more common A stock. Under the Bitcoin monetization program, well, we first learned that they have $2.5 billion in their USD reserve, which should allow them to pay off dividends for about 17 months. But maybe my guess is the credit rating agencies or, the risk managers in the traditional finance world didn't see that to be as enough, which is why my personal theory, right? This is just my personal opinion. It could be a different reason. But the bottom line, they announced that they can sell up to $1.25 billion worth of Bitcoin to fund their dollar reserve. But that's not it. Aside from this figure, they could sell Bitcoin to pay off dividends on the preferred equities and even sell Bitcoin to buy back MSTR if it's at a discount, which it is at a discount. In conclusion, $225 million, like this could not be this is maybe not the end of it. This may not be the end of Bitcoin sales from Strategy's side. They do give a disclaimer that they may abandon this Bitcoin monetization program, but so far, according to the information presented in front of us, it may not be the end of it. It could be just the start for the selling pressure. And it's, Saylor got me yesterday. He posted Bitcoin is digital energy, clickbaited us, and then ended up selling Bitcoin. It's nuts. So the recent sale was for funding Stretch payments. Stretch and these other preferred equities have dipped so far away from parity. The whole point of these preferred equities is if you want to escape Bitcoin's volatility, quite ironically, then you may choose to buy into, let's say, Stretch, collect your subject to decision of Strategy. They may decide not to give you this dividend, but anyways, you get your dividend and you get exposure to Bitcoin by not having Bitcoin, but you get a flat 11.5%. That was the whole sell. When Stretch went 20% off parity, obviously the lucrativeness shifted, the demand for Stretch went away, and the only vehicle Michael Saylor had it in his disposal to purchase Bitcoin in a bear market through not diluting shareholder value was this thing, and it didn't work. In the bear market, it just didn't work. Doesn't mean that it won't work in the future. In the bear market, it's a bad concept, and you acquire dividends that you must pay to the investors who bought before. How are those dividends paid? Strategy, yes, has a software intelligence or analytics company or business, but that business lost Strategy hundreds of millions of dollars in 2025. So they have a losing business, money-losing business. The only way that they make profits is by their unrealized profits on their Bitcoin. But if they don't sell the Bitcoin, then how can they be considered as a legitimate money-making business? And that was the excuse Saylor gave on my friend Bonnie's show, Bonnie and David Lynn's show. The excuse he gave for the controversial 32 Bitcoin sale in the final week of May was, look, I sold the Bitcoin just to prove to everyone that we can sell the Bitcoin if we have to, so that, if you have an asset, if you have real estate and your real estate has gone up by a couple of $1 million, but you're not really selling the real estate as a real estate portfolio company, people may not want to invest in the company because they're like, okay, you have these unrealized gains, but until you sell them, how will you pay off shareholders? How will we see value? It made sense. It made hypothetical sense, and we all moved on as an industry until now. December 2022, the $11.8 million sale was really to get a tax benefit. From my research, they sold this at the bottom of the bear market and got most of it back in tax refund, which they may have ended up using to buy more Bitcoin in the future. It's a completely different scenario and a completely different story as of today. And things like going from never sell your Bitcoin in dozens of tweets and dozens of interviews to buy more Bitcoin than you sell, and then claiming in Bitcoin Prague, I never said the company wouldn't sell Bitcoin. I meant that you shouldn't sell Bitcoin. It just makes the situation worse. Is it concerning that Strategy are selling in the short term? But I think this will only happen in the duration of the bear market. When Bitcoin escapes the bear market and pivots back into the bull, the selling pressure should stop in theory. Stretch should go back to parity. There should be more buying pressure, and they can go back on course to purchase more Bitcoin. So it's only a short-term thing, and it's not great for price action. It's not great for media propaganda. However, it's temporary, just like the bear market. It's what you do to adapt to the situation as a treasury company. It's totally normal. What doesn't make it cool is that Saylor didn't prepare any of us for that. The whole thing that he had was to never sell the Bitcoin. Literally, he said, sell a kidney if you must, but keep the Bitcoin. It's seen by 10 million people. He never marketed the company as a portfolio company or a treasury company that could move around funds at times to do different sorts of things. It is what it should be doing, but, you know, it came as a slap in the face, which is the real issue. How about the prices of these things like MSTR? Of course, MSTR and the preferred equities, like they will go up in value. Because you're seeing sales of BTC, the investor will assume that, okay, he's going to buy up more of these things, pay off the dividends. Cool, I'll allocate back into the common A stock or preferred equity. But when it comes to Bitcoin, which I got stopped out from, at break even, as I mentioned, I put in the video from this morning, I put my stop loss to break even. I'm out of that trade. Sadly, I wanted to keep that trade. If we didn't have this news, Bitcoin should have continued rallying. I'm going to look for a new entry, potentially at the 61,500, but this is a topic for the next video that will be coming up. Make sure you have the notification bell turned on so that you're alerted as soon as I update you guys on my next move with Bitcoin trading. Bitcoin is dumping. It's never good for Bitcoin holders to learn that the biggest purchaser decided to offload BTC into the market. It's only speculative. The damage was done yesterday. It was done on the first week of July. Clearly, we didn't care. It's only about the news hitting the market. So that's the deduction. It's temporary. When the bear market goes and bull market returns, he will most likely end up buying more Bitcoin than he sells. But is it nice? Of course, it's not nice. And that wraps up the video. Thank you all for watching. Take care, and I'll see you all soon. Bye-bye.